Everyone had a decent week. I want to start off with the S&P, so I'm getting this stuff now. Use new hardware. Sure, I'll use it. Okay, so Monday I talked about the 2-week off number. Okay, it was right here. And I said that off numbers at times act like magnets, and the off number is 2754.80 by today's close, so we probably have a sell. I don't think we're going to get to 57. Okay. I also want you to notice we have an inside week. So normally we're at the 61.8 level right now. If it was a different day in the week, I would try it. I have FOMO right now. What I should do is maybe just put a small piece on and see what happens. But my preferred scenario is that we don't really start, falling apart from here. And also want to let everyone know we're closed Monday for President's Day. No, it's not in celebration of Donald Trump, although he probably thinks it is because he has said, I'm not making it up, he's one of the greatest presidents except for maybe Abraham Lincoln. So here we have it. We tested the 61.8 level here. So having an inside week, ideally, if you're bearish, what you would like to see is this week's highs being taken out. And if we get through 61.8, we could go to 78.6. I'm figuring in the 27.66 level or so. Another reason I'm not going to take a short today is although the dollar is bouncing, okay, and you know what, look at this, we have some pretty good divergence happening here on the weekly, above 30. We have it in the daily, glaring, right? This day we're having today, we made new lows, RSI is not confirming. So I think we're getting close, but again, this is a Friday. So the reason I'm not going to short S&Ps is I think that there could be, and I could be wrong, maybe today is the day in both, one more jiggle to the downside and the dollar 130 pips from here. So if that's going to happen, that should be supportive of the S&Ps for a continuation move, although it's really starting to look like they want to turn it here. Probably at least a scalp today. But whether it's the turn and the rally to sell, 61.8, I'm not the only one seeing 61.8. Can you guys see this? 61.8 to the button is a high. 200 days, this is a 4 hours, a little above it at 52. So if I'm right about the dollar, maybe they're going to continue to push it next week. They don't have to push it a lot, but as long as early next week, which will be Tuesday or Wednesday, we're cleaning out this week's highs. We start off higher, and then we start trading lower for the week. Then you have the potential for a reversal week and perhaps even an outside week down. So that's my view there. Euro took care of some unfinished business. We finally made a new high. It was laborious to get it done, but we did it. Still a pretty good reading, so I'm still thinking there's another 150 pips to the upside, although this could be it. Just like the 61.8 could be it in S&Ps. But for the week, it was a pretty good week. So, and it's a Friday, so I'm not doing anything about bottom picking the dollar or top picking the S&Ps. So a lot of the action that I'm looking for, I think is going to happen next week, unless I'm pulling my hair out by the close because I didn't do anything. You guys ever find that you're really not in the mood by Friday to do much? You kind of want to wind down. Maybe it's my age, but there is something else that I really believe in, and here's the Treasury yields. And we're getting, I talked about this, we have the breakout, right? Steve showed this line. So we're sitting at the breakout now. It's not having a great week. I think it's probably still higher on the week. Let's see. Yeah, it's still higher on the week, but that's a pretty good weekly RSI reading. But the daily, we have glaring divergence up here. And, you know, the most surprising call from Peter Goodburn was a move in yields back to 190. I'm going to have to watch that video again. I don't know what would spark it. And, you know, if it was anyone else and I hadn't seen how many things that, you know, have surprised me with, I think he said 195. So I got to think the only reason that, you know, something that dramatic would happen to the bond market is because people are afraid of something. So anyway, that's my view for the weekend. Was our mission all week, just like it's been for, God, almost 11 months, 10.5 months here to build you guys up. You guys feel stronger being part of FACE? You getting off the ground and beginning to fly like an eagle? Or are you still, you know, just waddling around on the ground like a chicken? So this is nurturing you and making you a tougher, stronger warrior to expect everything, to learn to control your emotions. Anthony is soaring over the Empire State Building in New York City right now. And you know what? It's also time for the ForexAnalytix team to be soaring and celebrating that they won the FX Street Award as Best New Contributor. So with that being said, I want to congratulate you, Blake, and Steve, and Stelios, and Nick, and Grega on winning this award. There's an awful lot of people that contribute on that site, that a lot of competition. So congratulations on standing out and providing great content to FX Street and being acknowledged for it by the public.
Thank you, Dale.
You're okay.
Hey, Dale. Sorry about that. I was just about. I was listening to what you were saying, and then my dog started barking, so I had to go.
Congratulations, guys.
Hey, yeah, it's pretty cool, huh, Steve?
Absolutely, mate. Absolutely, and you know, we really want to thank everybody that you know, supported us with their votes.
Yes, we could not have done it without our. We are a reflection of our traders that support us, for sure.
So how are we going to celebrate? In a Skype chat?
Well, I'm gonna let Steve talk about that in a little bit after I'm done with my analysis. But Steve's got some pretty cool stuff planned for our traders as a result. So so I'm gonna leave it with that with Steve. When I'm finished with analysis. Sound good, Steve?
Okay. Should I short S&P?
Yes, absolutely, mate.
Okay.
Should I short S&P here at 61.8 back?
All right, so let's talk a little bit about this, and once again, Dale, I just want to say thank you to all of our traders for the support that you've given us. Because of you, we've managed to you know, to win this prestigious. I see it as a prestigious award. FX Street is one of the leaders in our industry. And so to receive this award it's been awesome. Stelios put together a great video. I don't know where it's at on the site. I haven't had an opportunity to look yet this morning because it's been so busy. As soon as I got up, it's like as soon as I got up, it was like analysis had to go out, trades had to get done, and even though you might not be trading, Dale, I'm getting really busy this morning, and let me talk a little bit about that really quick, because first and foremost, I echo your sentiment as far as the S&P stopped at the 618 retracement overnight. So I have it on Bitcoin here because somebody mentioned Bitcoin and I had to take a look at it, but let me go over to the S&P. So the S&P, if you guys haven't seen it, we hit the 618 retracement overnight. We hit, you know, the brief new highs here. You can see it just like this, right? We hit brief new highs. We hit the 618, not this one. Let me get rid of that really quick. Okay, hit the 618 and stopped and reversed in European trade. Now, we have, I think, an ascending wedge. So if we break back below, let's call it 27.25 or so, maybe 27.30 even, then that's going to give us a nice reversal in the S&P, and that should be looked at very carefully because, you know, in the currency market, how does that affect what we're doing? Well, how that affects us is that we've seen the dollar strengthen as a result when there's risk off. So, you mentioned the dollar, Dale. Let's talk about the dollar very carefully, and I want to be very specific about the dollar. I'm going to put it on a daily chart really quick,
Okay.
and I'm going to take you over to the daily chart, and I want to show you something. Okay, let's stop right here, right here. Okay, okay, so if you take the dollar, see this fib I've got here. Okay, the inauguration high. The low from 2016. You got it?
Yep.
127% extension. Okay.
Yep.
Now you take the low from 2017 September, you know, lows to the highs that were posted in November.
Right.
161% extension. Okay. That had been holding us like a rock. I mean, we'd been, you know, support, rally, support. Overnight, we plunged through that support. So we broke new lows. Do you see that little breakdown right here? You guys see this one? See that? That little breakdown, right?
We do.
Okay, now let's go over to the weekly chart. If you take the low from 2014, okay, you see this fib? Low from 2014.
Yeah.
Okay, let's snap that to the price.
A lot of confluence of fibs from looking at all different angles here.
Okay, so yeah, there are, and there's the high. Okay, inauguration night, day, the low, 618 retracement. You see that?
Yeah.
So we hit the 618 and then reverse. So what happened? You hit new lows.
You took out the stops.
Took out the stops and then reverse, and now we're reversing hard. Okay, if this market goes risk off, this dollar index is going to trade above 89. And if you want to ask me, if you ask me where the dollar really starts to squeeze, it's right here.
Yeah, that high. 89.
We break above 89.
Yeah.
The dollar's going to squeeze your pants off, all over the place. And I'll tell you what, I wouldn't want to be short the dollar. Now, the dollar yen is more of an anomaly. You don't, when I talk about dollar strength or dollar weakness, the dollar yen doesn't really factor into my thinking. The dollar, especially when you're talking about risk on or risk off, the dollar yen is going to sing its own song here. Okay, the dollar against the euro, the pound, the Aussie, the Kiwi, the Canadian, the Nordic currencies, that is where you're going to see dollar more related to the dollar index. The dollar yen, even the dollar Swiss to a certain extent, those currencies tend to act a little different during risk on, risk off. So if the stock market reverses, I believe the dollar, for the most part, is going to rally, and it already is showing its colors here. Now, look at the dollar index. Now, it's early, but look at the dollar index hammer that's developing today already. All right. If we close above or at 89 in the dollar index, the dollar is going to be in for a bit of a squeeze. And if I'm correct in my assumption about this S&P, the S&P stops here at the 618 and does reverse, I think the dollar index might have a couple of days of a squeeze going on. So I'm already positioning myself long the dollar. I've already started buying it against some currencies. I plan on buying more dollars if the stock market shows some signs of weakness from here. That means that, you know, if the S&P does drop through this like 27, 30, 27, 25 level, I'm going to be really looking for a bigger, longer term dollar reversal. The only data that we have out today is some housing data. We have building permits and housing starts, and you know, I don't think that's going to be too big of a mover of the dollar. I think the dollar is going to be moving mostly on risk aversion, risk appetite, and you know what stocks are doing. So that's what I'm really paying attention to. And like I said, I've already started nibbling my way into some dollars. I'm, you know, shorting some Aussie, shorting some Kiwi. I've got other trades going on too, but I'm telling you guys that this dollar looks like if it's going to reverse today, it's going to reverse. And same with stocks. If stocks are going to reverse, it's going to be today. And look, we've had a great week in stocks. They bottomed last Friday. I think it was Friday, right? The 9th. Yeah. So a week ago, they bottomed. We've rallied all week, and we hit a key fib level. I think there's risk of a pullback here. I think there's risk that, you know, hey, the stock market's had a great week. A lot of people are going to be, you know, this recent memory of the stock market probably is still sitting. You know, the Dow didn't quite hit highs. I was thinking we were going up to the D here, but you can see the Dow really struggling right into its resistance zone, if you will. There's the Dow, the S&P.
It's the weakest index. It's the only one that was just barely able to clear out that recovery high.
Yeah,
Russell blew through it. I think NASDAQ blew through it.
Yeah, Russell did. I mean, look at the Russell.
Yeah, the Dow's a weakness.
Here, let's. Russell's in between fibs. That might be 127% extension. Hold on, let me check something really quick. I wasn't even looking at the Russell. Yeah, 127% extension. Yeah. Should stop right here. NASDAQ. I mean, look at the NASDAQ. I mean, the NASDAQ, hell of a reversal.
78.6 up there, probably.
Yeah, it is. It's a 78% retracement.
I don't need tools.
What's that?
I don't need tools, I guess.
Yeah, hey, it's great when you can eyeball it. That means you've been doing this for a long time, Dale. So, you know, I'm just, you know, looking around, guys. You got to be really, really careful if you're, you know, long stocks up here or short the dollar. You know, the dollar, there's a chance that the dollar really starts to show some muscle down here, especially after being beat down so bad. There's let me hold on really quick. Let me pause my screen. Let me grab something really fast. Pulling it up right now. Okay. All right. If you guys. Okay. Sorry, I'm hearing the squawk is in my ear too. Can you guys hear that? Dale?
Yes, Blake. Yes, Blake. We can hear it, mate.
You can. It doesn't drown you out. It doesn't drown you out at all. It's background noise.
It's background noise. It's not like you can't hear like clear European. It's hard for me to talk when I'm trying to talk over. I have this squawk box squawking in my ear right now at the same time. Anyway.
All right, so you're going to talk about the DSI and the high readings in the euro.
Yeah, here, hold on.
I'm just being mind
Thank
reader.
you. Here's the Swiss. Here's the Euro. Oh my God, hold on. Shut up, for crying out loud. God. All right, I'm back. It's just blah, 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 blah. Okay. Sometimes it's important what they have to say, but a lot of time it's just recapping. It's like, I don't need a recap. I want to hear breaking news and that's it. So shut up. Anyway, so we have VIX 15, okay, low reading. Swiss franc, euro, high reading. Yen, high reading. Okay. Pound was a, hold on. Pound's a high reading. New Zealand dollar in the 80s. Those gold in the 80s, which we'll talk about gold here in a second. So a lot of like very high readings as far as volatility, high or low readings. All right. Which again, it's all a risk of a snapback, if you will. So I think we have to be very careful here if you're short the dollar or if you're long risk. If it's all going to reverse, it's going to reverse it here. And so the only thing that's going to deter me right now from being long the dollar today is if the S&P hits new highs from here. If the S&P hits new highs from here, wherever it is, let me go back over to the S&P. If the S&P hits new highs from here, then I'm pretty convinced that we're going up here somewhere. We're going up here. And it may happen, but it's not usually a coincidence when you see the dollar reverse at such a key level. The S&P could reverse at such a key level, and so therefore I'm willing to bet on the dollar today and bet against the stock market. Not necessarily shorting stocks for me, but betting against the stock market, meaning selling or buying dollars and selling a lot of different FX currencies. Now that's really all I had to say. And I heard Stelios's voice. Hey Stelios, how you doing?
I am very good, my friend. How are you? And I just want to make something clear, by the way, to our viewers. The video, the celebratory video, was made by the most handsome person on the team. That's
this
why
is correct. That is a correct statement. Very debonair.
Stelios' dog.
So Stelios put together a nice video. And by the way, where is that video located?
Good question. I don't know. I'll have to search on their sites, and I will post the link. We'll probably.
I have the link.
Oh, you have it?
They sent us an email with all the links, Delia.
I'll have to have a look at that because I've been away all day. But yeah, I'll check that out.
Great. Well, congratulations to once again. I'd like to congratulate not really so much the team. You guys have done obviously a great job, but congratulate all of our viewers and all of our supporters for really being a part of this and thanking them, because it's because of them. We were able to get the nomination and ultimately win the award for best newcomer, and we were up against some stiff competition. So it's really an honor, and I hope that you guys continue to enjoy the webinars that Dale hosts every single day. And remember, they're free. We obviously, we'd love for you to be a part of ForexAnalytix. I mean, to be part, and here's our community, like here's our chat room with 96 of us that are in here. You guys are on Jumbotron right now. I mean, these guys and gals, we're out here chit-chatting all day long, talking about what's moving, sometimes joking around a little bit, but ultimately really very that's awesome. Nice, Oliver. Very cool. We're obviously talking about the markets all the time, always, just a great friendly environment there. And we hope that you guys will eventually become a part of it. And we know being part of the ForexAnalytix community is not for everybody, but hopefully you end up finding your way to us. And we understand I mean, I trade from home. I trade from a home office, and and I'm away from my office that's in, you know, the Northeast United States, and it's lonely here. You know, it's lonely, and having all of these friends and traders together, we have a great community. So hopefully you guys can all be a part of it in the future. Steve, I know you're going to have a little bit of an announcement of what's to come for everybody. I'm going to let you handle that with Stelios, and I've got this Bloomberg guy chatting in my ear again, so I can't stand it. Okay, I think he just shut up. Jesus.
It's another way to feel less lonely.
yeah, I guess. I like it when the lady speaks. Sometimes they have a lady here. That's great.
Actually, Blake, Scott is saying very rightly so that Greg also won his category, so he did very well. We mustn't forget that. Congratulations to him as well.
Yes, we must not forget that. Grego, who is part of our team, won his category in the FX Street Awards, which I had no doubt that he was going to win. He is such a great integral part of this team, and we really got lucky associating ourselves with Grego Horvat. He's been nothing but awesome for our clients, and his work. I mean, you just look at his patterns in play. Just if you guys don't normally follow ForexAnalytix, if you just look at some of the trades he puts up, I mean, he's pretty amazing. So you guys have a really great analyst there, and we're happy to have him. So anyway, I've got to get going. Once again, thank you guys. Thank all of our clients and all of our listeners for their support. I really appreciate it. I know you guys do too. And Steve, I'm going to let you talk about what's in store for them.
Blake,
yes.
Before we do that, I'm pretty sure that you've noticed that we don't only have a wedge in the SPX, but we also have wedges in treasuries, the bonds, and the USD yen. And I do think that that might prove to be significant. I mean, it adds extra fuel to the potential of some reversals here, I think.
Absolutely, it does. Absolutely. The only thing is, I'm as I said to everybody earlier, I'm a little hesitant about trying to play the yen, but because if risk, as you can see, stocks are hitting lows of might be overnight.
They actually just turned, the SPX just turned negative, slightly negative.
Yeah, so stocks are moving lower now, and I think that the dollar yen is going to be a little bit tricky, but I do see what you're seeing in bonds, and bonds look like they could reverse a little bit. That'd be some risk aversion, I would say.
Yeah, for sure. We might see some unwinding of the moves we've had, as you said. Anyhow,
yes.
enjoy the day, and good luck, mate.
All right, good luck to all of you guys. Thank you.
Okay, we have quite a few charts to have a look at. By the way, we're going to have more specifics for you guys on Monday, but to also celebrate our win in FX Trade, we want to kick off our own competition. For all of you that are listening in, you don't need to be subscribers or have been subscribers in the past. We will have a page with a competition. You will have to choose some. In essence, you will need to predict some future rates, and the people that come closest to that are going to be winning subscriptions and some ForexAnalytix stuff like mouse pads and T-shirts, etc. But you're going to have more details on in the first days of the new week because we want to upload a page for that, and we're going to share it with you. So we can give something back, and thank you for that. So it's just a competition for everybody to participate. Okay, so let's see what I was talking about. First of all, these are the boons. Okay, the boons have broken to new lows. We've already. Yeah.
Sorry to interrupt. We have numbers, and it looks like everything is very strong in the U.S. Building permits, housing starts, Import price
Yeah,
index.
although all of them, if I
Everything is
remember,
wrong.
were secondary data mostly, right, Stelio?
Yeah, I mean the housing numbers, building permits and housing starts are not, you know, they can be quite important. So, and Canadian data was bad. So I'm guessing dollar CAD is not doing very well.
Building permits,
Actually,
yeah,
it's doing
building
well.
permits is quite strong. Whoa, yeah, it is quite strong actually. Export price index
And import price
higher.
index, we're seeing inflation, right?
Yeah, import price index also bit. So whatever is a leading indicator for inflation has been coming in strong lately. There is absolutely no question about that. Manufacturing sales lower. Okay, let's have a look at the USD CAD, and we'll come back to the bonds and to the USD yen. Okay, let's have a look at the USD CAD and see how it's responding to that. Okay, we are seeing a rebound here after getting that move below this little consolidation that we had. Obviously, and there is no question about it, the USD CAD is currently in no man's land. As long as we remain above this 124 area, but at the same time we're being capped by the 126.60 area. In my opinion, this in between more or less doesn't give us enough information, because simply this can be just a little correction to the previous move higher we've seen from this descending wedge, or it can be a new leg lower. My intuition tells me that we should at least see one more leg to the upside. So as long as we remain above 124, I have no position here, but in all honesty, I would probably be looking higher than lower. Now, if we break below this horizontal zone, then yeah, I would be looking lower once again. And I don't want to be misinterpreted here. I've said it many times. I would be very gladly selling USD CAD, but I think that we might get better prices to do that. Anyhow, so let's see how the USD is responding across the board. Let's go to the euro. And there was a question about the USD Swiss. I'm going to have a look at it. The euro, by the way, incrementally pushed to new highs earlier today. It's the exact opposite of what the DXY did, which pushed incrementally to new lows before reversing. So we're seeing the exact same situation. Cable didn't push to new highs because it has obviously been weaker than the euro. We've seen that also through the euro pound cross rate. It seems to be reversing at the moment, but in all honesty, this looks to me like a bigger consolidation. So for the time being, we need more price action to determine what kind of a structure we have here at hand. Is it something like this? Is it a flag? But anyhow, plenty of interpretations can be viewed as bullish, especially given the prior move to the upside. Okay, so as I said yesterday to a friend here that said he was short, a lot of things can happen here, and people can just decide to spend a period of consolidation or even of contracting price range and price action. Probably it's a good idea to wait for more clarity. And we've said many times that in corrective moves, in advance, you can never know the way they will unfold, right? So you can keep tracking them. Initially, they might be looking like triangles, then they might manifest to something like a flag, or on occasion, they might prove to be real reversals. But it's too early to have confirmation about any of that happening. For the time being, as I said, it looks more to me like a consolidation near the highs. Obviously, if you want to be short, you can use today's high, which gives you a good reward to risk opportunity, and hope that this was just a first leg lower and there is at least one more coming, which is a possibility, because anyhow, even a move down to 136, 136.30 is quite likely without even breaking this series of higher lows, right? So we can easily push from here down to 136, get perhaps an ABC or something like that, and still maintain an overall bullish bias. So something like that might unfold. Anyhow, all eyes are definitely also on the DXY. Now, Blake already mentioned, is there a chance that this was a false break lower in the DXY? Yes, there is a chance. Ideally, I would like to see, a bigger move to the downside to tag some kind of a fib extension, the 127.2 or the 161.8. They are at 87.86 and 87.12. But yeah, that's not going to be the first time we will be seeing like a false break lower. The RSI anyhow hasn't yet confirmed, right, the bearish move. We have a clear divergence here, and yeah, how we close on the week is going to be quite important. Now, are we also going to see some continuation to the downside in the indices? That's also a day that can, that can tell us a lot about that. Blake already showed that and Dale showed that we are at the 61.8 at the SPX. The Nasdaq is at the 78.6. We've already had, if I remember right, so far it has been the best week we've had since 2011 or something like that. I was reading yesterday, so it has already been an amazingly strong week. So it's quite likely that we're going to see some pullbacks. The question is, and here is the story I was saying about what happens here with the USD yen and the bonds is the following. Let me bring the 4-hour charts here. Okay, here is a 4-hour chart of the USD yen. I posted that yesterday in the chat room, actually, almost like 20 hours ago. Here is a 4-hour chart of the USD yen, and keep in mind that we've also tagged some important support. Okay, let me show you that on the daily, actually. And this is the area, you can see it on the daily, that we're seeing, that we found a low so far, right? So, combining the fact that we so far we're seeing a daily hammer, that we've retested an area that has been support resistance in the past, and that if you go down to the 4-hour chart, you can clearly see a descending wedge. I would be very skeptical here, at least in the short term, being short the USD yen. Also, given the fact that sentiment has completely changed. I mean, almost everybody was short the yen along the USD yen, or anyhow expecting it to move higher some time ago, especially when we were retesting once again that area, the 114 area, right? And it wasn't that far back. It was just in November. And now that the sentiment has completely shifted. So you see a lot of people, saying that, yeah, okay, it's obvious, that the yen is strengthening, USD yen is bearish. So, that can easily squeeze people to the upside for at least, if we squeeze out of this descending wedge, we can easily see a move back to retest the 108, 30, 108, 50 area. And it can happen a lot faster than many would expect. The exact same thing applies if you have a look at the treasuries. Now I'm going to be staying in the 4-hour time frame, right? So the exact same thing you can see here in the treasuries. I was initially monitoring this as a possible descending channel, and it was working out just fine. But then we got that spike out, so we can delete this. But just look at this. Right? Can this be a wedge? Sure it can. How will we know that it's a wedge? Simply by seeing a move above here, right? Only then we can say that this was a descending wedge, right? For the time being, it looks like one, for sure, but there is absolutely no confirmation, right? So keep in mind that the fact that you might be tracking a potential technical pattern doesn't mean that it's going to prove to be that technical pattern. You just, by being able to recognize patterns, through training, etc., you see the potential. Now, where do you know that this is something significant? simply, we had this area, as you see, this horizontal area that acted several times as support before we finally broke below it. And we need this area, which is, let's call it 120.80. We need this area to be broken to the upside, and then we will be able to speak about an ascending wedge, and then we can be looking for upside targets. For example, one of them is going to be here, 122.20. But until that happens, this can easily be just a little pennant consolidation, right? Before we see a break lower. So keep that in mind. There is the potential, but we don't have confirmation yet. Now, the bonds, on the other hand, look quite better than the treasuries, because it looks like that if this is a descending wedge, we've already had, or anyhow, we're already in the process of breaking higher, right? Now, where would I feel more comfortable about this? On a break above this zone, right? So a lot of potential. You can also see here, it was obvious on the treasuries as well. Dale would definitely mention this as a how do you call it when you have triple divergence in the RSI, Dale? Three drive pattern, if I remember right.
Yeah.
Yeah. Okay. So you can even view this as a three drive pattern, right? Because we've had RSI divergent like 3 times here, and you know this is also something I'm monitoring in the bonds. Now,
I was talking about the yield chart too, diverging when we were above 290. So
yeah, absolutely. So if we look at the yields, now that you mention it,
yeah,
there it is. Because obviously, since they are inverted, obviously somebody can view this. This is the 4 hour in the yields. Somebody can also view this as a potential ascending wedge. So
I think you're right. It's either today, you know, and the S&Ps fail, or there's one more jiggle to the upside. And
here's the divergence you were talking. Here's the divergence you were talking about, right?
Yeah.
So
there'd be another one if it attempted another rally, but and there's so much bearishness in bonds.
Yeah. So for example, something like that,
yeah,
another retest.
Yeah, that could happen into next week. If everything Blake talked about doesn't happen today, doesn't mean even if we get higher levels or one more low on the dollar, I think they're as or even more viable if that sets up. In my, humble opinion.
Yeah. So anyhow, bottom line is that if you remember, I said it first time yesterday as well. This is not the time. This is not the time to be overly bearish the dollar or overly bullish stocks, etc. Because we are in a dangerous technical spot here. By the way, dollar is strengthening. I see the Aussie dumping. Let's go back to the daily charts and have a look.
For as weak as the dollar was, that was a pretty marginal pullback in Canada.
Give me 1 second, Dale. I have some issue with the audio. Give me a second. Okay. Let me switch. Hey, Dale. Can you hear me?
I can hear you fine, Steve.
Okay, perfect. Okay, just making sure. Okay, so what we were saying here, yeah, Aussie is doing its third consecutive daily attempt to reverse. So you need to be very, very careful, right? The reason I'm saying this is because we saw the exact same price action yesterday, and the day before yesterday. So both yesterday and the day before yesterday, we were seeing at some point Aussie being on the lows of the day after having pushed to new highs. And then we reversed once again and closed on the highs. To be perfectly honest with you, I'm looking to be short. I was stopped out at break even, so I'm looking to be short Aussie once again. And today actually it looks quite good to me, because today we actually tagged the 61.8. We didn't actually tag it. We came like, I don't know, like three pips away from that. I have it on my 4-hour chart. You can see it here. This is the previous fib, but I can immediately fib it for you, and you'll see it. So here is the fib retracement. Here is the high. Here is the low, and there it is. You see, we almost tested the 61.8. I was initially expecting that we might get a rejection from this zone, the 79 zone, but the 61.8 is obviously, which is at 80, is also a nice psychological level we almost tested. It's always, a nice area. So we might get a move lower from here. The only sure thing is that 79 might act as support and give us one more leg to the upside, because whenever I have a strong support resistance area, I should also always consider that possibility. But if 79 breaks to the downside and does not provide us with a rebound, I think that that's the ultimate confirmation that Aussie is moving lower once again. So these are the two scenarios I see from this point on. By the way, this has already happened. We can delete it. So Aussie looks good. Aussie looks good for a continuation to the downside, as long as we close with such a negative candle like we seem to be forming at the moment. Kiwi also has the potential. It's too early to call it, of course, but somebody can already start talking about a potential double top. Although I never like to talk about double tops, etc., just because we momentarily or just for a day we got rejected from an area. But the fact that we got rejected from the previous high is also something to note. We need more price action and more evidence, but definitely something to note. Let's have a look at USD NOK. USD NOK is also finding a low in the short term here, making a hammer. It looks, I have to say though, that the USD looks worse against the NOK than in the vast majority of the pairs I've seen. So you have to keep that in mind. If you want to play further USD weakness, perhaps the selected instrument should be the USD NOK, because as I said, NOK is behaving much better against the USD than the vast majority of other currencies I've been tracking. Definitely today's close for dollar pairs and risk is going to be an important one, and might set the tone for the week ahead. We're not expecting any more data today, or anyhow nothing of significance. So I don't think the market is free to move to wherever it wants to move at the moment. There's nothing we're waiting to come out that can actually influence the market from this point on. So we just need to see what the market wants to do in the following hours. So let me have a look at a few questions, and I have a few people that are sharing chats as well. Thank you for all the congratulations you're giving us. Okay, Ronit, German Bund. He's sharing a German Bund chart. Let's have a look at it. There we go. The 10-year yield. Okay, that's the yield. You're showing me that we have a break higher, but we have some pitchfork resistance here. Okay. Definitely there's a lot of potential upside for the German 10-year yield. There's no question about it. The question is if it's going to happen from here, or if we're going to first see a squeeze. The problem with dollar, it needs to flush the longs. Dollar chart, let's have a look at it. And then you also mentioned, this is the, wait a second. I think you put the same chart twice, or I didn't copy it by mistake. I'll find out now. Yeah, I didn't copy it, my mistake. Okay, here we go. USD index. Which index is this? At some support though. Okay, let's have a look at crude because you just mentioned it, mate. Okay, here we go. We got a nice rebound, but at the moment the crude is struggling with the 50 DMA. So there is still the potential for another move to the downside. As I said, 58 was a really nice level. Okay, this has already happened. We can delete it. As I said, 58 was a level that I really liked to be buying crude. The reason I didn't do so is that we got there so soon that experience tells me that it's quite unlikely that we're going to bottom out so fast. So the price retracement was enough. It was significant, but I don't feel comfortable with how fast we got there. So I really believe that there might be another push to the downside. Now, we're going to know if that was actually a bottom, in my opinion, if we retrace somewhat and then find a low somewhere there and then rebound strongly. Then I'm going to start considering that, perhaps 58 was the low after all. But, I think next week we're going to have more information to talk about this. It's still quite early. Use the SEC, absolutely. We haven't had a look at it in some time now. Okay, this is what we were looking about the USD SEC. So far, it's worked just fine. Last time we looked at it, we were there. I said another push to the downside. Then perhaps we can see a bigger rebound and then a push to new lows. So far, all of that has happened, but we don't have a confirmation that we're going to push lower once again because we're finding support at this area for the third time, as you see. So if this zone actually breaks to the downside, then we are indeed headed to new lows. So that was like a good prediction. Otherwise, we might see something like more choppy price action or like let me delete all that, it has already happened. Or we might see like another leg to the upside and then a move lower from there, right? So that's what I see with the USD SEC here. But as you see, this is a significant zone. If we actually penetrate below it at some point, there is a lot of, and a huge air pocket here. In essence, no real support. I mean, use this SEC. If it breaks below this area, it can move. It can move significantly. So if you want to be bullish, you definitely don't want to see that area being violated to the downside because who knows where it's going to stop afterwards. Oh, it's UUP. Okay, weekly bullish engulfing daily. Bearish engulfing for USD pairs, nice end. Yeah, we might be about to see some some quite significant reversals today at the end of the day, but it's too early to to push ahead and assume that things are going to close like this. I'd rather see them happen. Why not go with the trend and wait for buying opportunities? On which pairs are you talking about, mate? Why not go with the trend and wait for buying opportunities? Absolutely. I mean, I'm with you in general as a rule of thumb, but that doesn't mean that you shouldn't be, expecting or trying to guess where you might see some reversals, because even if you want to be with the trend, you don't want to be with the trend when you see a big reversal or like a big squeeze, correct? Now, also the whole conversation about being with the trend is also a conversation that has to do with perspective, right? So for example, can you please tell me where the trend with the Aussie USD is? Is it higher because we had that significant move higher? Is it lower because the last move was lower? Is it lower because this is a huge correction to a move that happened from 110 and brought us down to 0.67? So it also depends on what time frame you have in mind before, you know, speaking about the trend, right? Because, for example, if you're looking at the big picture, the trend for the Aussie USD is definitely lower until proven otherwise.
You know, everyone knows the trend is your friend. How about every trend will always end?
Yes, but you know, the point. This is very correct. But the point here is that, you know, a trend usually ends once every now and then, and in between you just have a trending market. For example, or no trend.
Yeah.
Or no trend. Yeah. For example, there are periods that you have no trend. That's absolutely correct. And these periods often can be very prolonged. For example, just look at the USD NOK. The USD NOK was in essence lacking any trend for a huge period of time, right? Look at it. Look at it. So, you know, if you were trying to predict where the trend is from, let's say, July 2015 to 2 years later, in essence, it was a coin toss, right? In my mind, it wasn't, because macro was always telling that, you know, the NOK was extremely undervalued in comparison to the USD, according to the, you know, to the economy's strength. But regardless, 2 years from a technical perspective, there was absolutely no trend there. So yeah, you also have a period of no trend. That's true. So it depends also on your time frame. So yes, you should definitely. I mean, there are good opportunities being with the trend, but I also know great traders. I can tell you as a fact. I'm a very good friend of Blake since many years ago, and you know, I know exactly how he's trading. I mean, very often I've seen, you know, his positions, and we've been talking about them. And I can tell you one thing for sure: Blake is definitely a profitable trader. I mean, I don't need to testify that for him. The fact that he's being employed by one of the biggest funds on the planet says enough. These people don't have you if you don't produce. You can understand that. And Blake, more often than not, will trade against the trend, but he will do it for short periods of time. I know people that feel more comfortable trading against the trend, and they know how to do it. Like, I mean, they know how to do it in a very profitable way. Now, if you can adjust your time horizon with your trades according to if you feel that you trade with a trend or not. So, for example, are you worried that you're not trading with the trend? You can have firmer stop losses. You can be looking to be in the market for you know, less hours or less days, depends on, you know, what kind of a trader you are, etc. Do you feel that you're trading with the trend? Then you can be more lenient with your stop losses. You can have like wider stop losses, and you can be feeling comfortable to stay for bigger periods of time in the market, holding a specific trade. But there is no right and wrong as long as you know how to do, you know, both kinds of trading. Yes, as Ronit says, basically time frame and position size matters. Absolutely. Hi, Steve. Could you have a look at the CAD? Thank you very much, Catherine, for reminding me for the CAD yen, because I actually wanted to show the CAD yen, and the reason I wanted to show the CAD yen was because simply the CAD yen, you cannot see it here. Let me bring the 4-hour charts once again. This is another chart I showed yesterday in the chat room. It's actually the first wedge I started tracking yesterday, the CAD yen, because the CAD yen is also potentially in a descending wedge. So it has been very bearish, there's no question about it. But it has found, I mean, this is the 4th time it's been testing the 61.8, and we might even break below it, but I can't stop noticing that, first of all, we do have RSI divergence here. Second of all, this looks quite nicely as a descending wedge, right? Of course, we need some kind of confirmation, and the confirmation here, I would guess, would be, I mean, a break above this area, right? 85, 70, call it. You know, if you want to be long before that, I can tell you in advance that you're jumping the gun. I'm not saying that it can't work, but I'm saying that if you do that, you need to be conscious that you're jumping the gun, right? Because
or put a small piece on.
Yeah, or put a small piece on, because this is not going to be the first time that I'm seeing something that's potentially descending wedge proved to be a point of yeah, a point of further acceleration to that direction. In this case, to the downside, right? So this is also a potential. Yeah, this is also a potential.
Anyway, buddy, I have a great interview. You know, this interview is more important for everyone that's hearing our voices right now, because it's not about a trade. It's about where you trade. It's about who you employ as your broker. So why don't you go out and buy all the champagne for our party to celebrate our victory on FX Street as best new contributor, and listen to Stephen, and you know, maybe you're not trading every time you click your mouse or you hit the button. This may give you some insight as to, and there's also no law against having more than
I'm already intrigued by what you're saying, so I'm going to listen in actually.
All right, so
enjoy the interview. Have a great weekend, everybody.
Have a great weekend. I'll see you on Tuesday, Steve, and nice work again this week. And I'm very glad for the company that it received the recognition that I knew it would get once we got on there. So with that being said, Stephen, I'm going to make you the presenter. I don't know if you want to show your website, but you'll also have a screen share option. Looking forward to hearing your voice, seeing your screen. If not, I could pull up your website. Welcome to Face, Stephen.
Hello, everyone.
Hi, Stephen. Nice to meet you.
Hi, Dale. You as well. Thank you for the invitation.
Okay. Are you going to be showing your screen or just talking to me?
Yes, I just clicked on the share screen button. So.
Okay. So let me just briefly introduce you, everybody. This is Stephen Hazakis. Am I getting it right, Stephen?
Yes, Hazakis.
Hazakis. And Stephen, I know where he's at now and what his work is and what he's passionate about. He's been in the fintech industry for a long time. And in fact, Steve, why don't you take us back to how you got involved in the industry? Steven.
Steve, hi, and another Steve here. Is your last name a Greek one?
Yes, I'm also Greek. Nice to meet you.
Nice to meet you too, mate.
Opa.
Thank you.
Hold on, let me pour a little ouzo in my coffee. All right. So, buddy, why don't you tell us about your journey a little? How did you get into the industry? What were what was your journey like?
So I got into the FX space when I was 18 years old, believe it or not. So I've been in. This was in 1998. So it's this year will be 20 years in November, and I've been in it ever since. You know, it's something that grew on me and became more and more of a passion over the years. And I've worn many different hats in the space. My roles have changed over the years in a natural and organic way. I went from, sales and interacting with clients on the front line and traders. I've spoken to literally over 100,000 traders over the years. So I've spoken to traders in like almost every country you could name where, the internet exists, and it's legal, obviously, to trade. And I understand the challenges that traders face. So from there, I transitioned into institutional sales and worked with companies and fund managers and professional traders, as well as introducing brokers. And then from there, segued into trading platform technology developers, companies that might offer some solution like as a plugin or some type of, independent service provider that, has some automated trading system or something that they want to monetize or offer for free, to, providers like yourself who provide a range of value add-ons to customers. And from there, I started writing about foreign exchange markets, the microstructure of the markets, not just from a technical analysis perspective, but also about the industry, the challenges that the industry is facing. In recent years, there's been a lot of focus about, best execution after all the, stories about market manipulation. So from there, basically, I transitioned into consulting companies on the fintech side, and one of my main roles right now with running forexbrokers.com is analyzing the trading applications that the brokers offer, the platforms, whether it's web platforms, mobile platforms, desktop platforms, and really, comparing the nitty-gritty of each platform beyond just the basic, order types and charting available. So having said that, I guess we could dive right in. I have the site in, and I'll be happy to answer any questions. So forexbrokers.com, which is the site that I run, is a Rank Media Group portfolio company. Rank Media Group, they've been around since 2009. Their primary brand is stockbrokers.com. It's the largest and, has introduced over $1 billion in assets to major US online brokers. So, when you visit stockbrokers.com, you could read and compare all the, stockbrokers in the US. They also launched a UK site as well for UK stockbrokers. They recently acquired investor.com. That was a major acquisition.
Oh, we're live streamed on there.
Yeah, that's great. Futuresbrokers.com is undeveloped. We're going to launch that next. And then Stock Trader is an existing business as well as Investing Teacher. So on to forexbrokers.com. Basically, this site publishes reviews about online brokers, and it really serves as a tool. I know usually your users are looking at, charts and doing technical analysis, but sometimes, as you mentioned earlier, you're just looking for the right broker to trade. And there's so many brokers to, choose from out there. So we provide tools where people can compare.
Not in the US, Stephen.
In the US, there's only a few. Yes, there's been a huge consolidation in the U.S. I would say the cause for that, as I'm sure you know, is the regulatory squeeze that happened nearly about 10 years ago, and that might change. Regulations are cyclical usually, so under this administration they might start to ease a little bit. But it's nice to see, for example, IG Group is coming back into the U.S. market, so hopefully we start to see more. International companies return to the U.S. because.
Okay. All right. So, a lot of people, they focus on costs. Okay. They focus on what are the spreads, are there commission add-ons, this and that. Do you evaluate these firms as far as clearing costs? Because if you're an active trader, it can affect your performance if you're not getting a real good price for executing your trades.
Exactly. So not only do we look at the spreads that brokers offer, but we also look at the average spread. And not every broker offers, that type of information. So I'll just click here on the reviews and just randomly, click on a firm, Dukascopy. So we have a commission section for every broker. There's a side little bar you could just click on and it takes you here. And we compare the broker that we're reviewing to their, to some of their competitors. So you can see what the all-in cost is on the Euro USD if you're an active trader. And it's also, and we factor in the commission as well. So using average spread data from this broker, when you factor in the round turn commission, the all-in cost was about a little less than a pip. So right now I'm going through an annual review process. What that means is we literally rank every single broker and we compare them against their peers across multitude of categories, commissions and fees, the range of products they offer, their platforms, their research, their customer service, their mobile applications, their education, and then an overall ranking. And then we give out some awards for who's best in class, individual awards, and we write the individual reviews. So like, again, I'm just clicking on a random broker, Interactive Brokers.
Do you cover a category? You cover a category that's really, I think, the most important category, and it doesn't matter what you're paying on a commission if your funds aren't safe. And
right.
Is that based upon who's regulating? In the old days, as an IB, a futures IB, I always wanted to be with a clearing member firm of an exchange because they were always guaranteed by the exchange. Like Stotler failed, but CME made their customers whole. What about some of these firms are like in the Seychelles or in Belize, some of these jurisdictions, are they red flags to you?
So that's a great question that I think every trader should ponder when choosing a broker. So we factor that in. We have something called a trust score here, and it's proprietary, but we look at a range of factors such as what countries the broker is domiciled in and the scope of their regulations. So if you, on the bottom of every review, we have a view all features, and that actually takes you further down into the specs. And from here, we also aggregate information about regulatory status. So for example, Interactive Brokers, they're registered in a number of jurisdictions, in major jurisdictions. So we separate emerging jurisdictions from major ones. So Seychelles, for example, I mean, we don't even rank that as a jurisdiction. So that would be an offshore jurisdiction, not necessarily an emerging one. So it might be legal to do Forex there, but there's really no rules for it. There's no enforcement. There's no recourse. If a customer has a problem, they can't file a complaint with any national regulator. So they're really in the dark. So that's certainly a red flag, but it doesn't in itself mean that a broker isn't reputable. It just means that they're going to be a little bit more opaque and obscure, so it would be a much higher risk for a customer, unless that broker also had other licenses from other jurisdictions. So the number of licenses is important, and that's what we look at. Like here, I mentioned for Interactive Brokers, they're regulated in numerous financial centers globally. Sometimes we don't list them all when the number is very high, but for other brokers we do. But that's a great point.
Okay. All right. So what else do you consider very important when someone's selecting a broker to trade through?
I think that, again, I'm just going to randomly click on a broker because, the purpose of our call today is not to review a particular broker, but to show that the site has a range of tools where you could compare brokers. You could literally, click on some of these links here and compare, specific brokers like ETX Capital versus FX Pro. Like I just randomly clicked on that, and it will give you a side-by-side comparison. And here you have some of those jurisdictions that we spoke about. So not to go around your question now, but just to finish on the last point we spoke about, you could see like all these different jurisdictions that we have listed for regulators, and who's regulated where. So in this comparison, ETX is in the UK and FX Pro is as well, but FX Pro is also in Cyprus. So we have emerging hub checked off as well. So I'm sorry, your last question was what else is important for clients to consider when choosing a broker?
Cyprus, so I'm a little ADD. So there's recent news. So I asked the question. I interrupt people before I forget it. Recent news about a lot of the Cyprus brokers no longer being able to service Russian business. Is that going to shake up a lot of the brokers and there's zillions of them using the Cyprus jurisdiction? What effect is that going to have on them?
Yeah, I think that's a great point. I think, Russia and Cyprus have very strong ties. There's a lot of, Russian Cypriot.
A lot of laundry soap.
A lot of good and bad. So, Cyprus is pretty much an access point into the EU for people that want to acquire a European passport.
Right.
So although I think that's a challenge to the Cypriot brokers, for the end customers, I don't think it's such a major challenge because many of them probably already have, you know, European passports and could just hop over to another broker outside of Cyprus. But for those who don't, they're going to have to choose, you know, to go elsewhere. So I haven't followed the story too closely, but I did see the headline recently over the past week or so. But I think that, you know, these type of things do happen, and we've seen regulators tell brokers, you have, you know, until next month to you know, give notice to all of your clients from, you know, from X country and put them into close only mode where they could only close positions, etc.
Yeah.
So it's unfortunate, but it happens.
Have you ever gotten a call from a broker, since you do rankings, and many people will start to go there before they make their decisions, either a thank you for, you know, a great review, or contest what you're saying about them because it's not good PR? Did they ever contact you?
You know, many in the industry, even at industry events, you know, other professionals from that, you know, don't necessarily work at brokers, even use the site to check out the landscape and to review, you know, companies that are either their competitors or either companies that they want to sell their service to. Yeah. So there's definitely been, you know, huge positive feedback, and also, you know, for brokers who, you know, might not sometimes rank as highly in certain categories, initially their knee-jerk reaction might be, oh, why did you say this about us? But, you know, when, you know, because sometimes even CEOs of brokers might think they have the best platform or the best product, you know, since sliced bread.
Yeah.
Right. So, but when you show the pros and cons of some platforms, because, you know, we're non-biased, so if, you know, we're not going to sugarcoat something. If some platform is really good in certain aspects, like it has, you know, amazing charting and a whole bunch of technical indicators, and, you know, but maybe the interface isn't so smooth, and maybe there's some lag in the charting and it doesn't update as fast. So we'll just, you know, we'll say it how it is. And, you know, we try to keep the brokers on the forefront of developing their services, because if they're getting this kind of feedback, you know, which they normally would pay for, you know, they would pay consultants normally for this kind of feedback. You know, we do it for free. So, you know, we benefit when traders obviously choose brokers and open an account, but we're totally non-biased about the process. So we don't, you know, promote one broker over another in terms of rankings and ratings. So nobody could pay for ratings or pay for rankings. Okay, well, that shows integrity, and you want to keep your business going. So what else would you have to share with us? What broker do you think provides excellent education? And, you know, I have a view that they spend a lot of money to attract new business. They don't spend much on retaining it and training customers, and then customers take a loss or two and then they become dead money. Do you know why they don't spend as much, invest as much in retention and training so their customers have longevity? Sure, you know, it's a really good question. You know, education is so important. I know you guys probably focus that as a core part of your business, and many brokers actually do feel that education is so important to their offering. It's just, it comes in so many different flavors, so that's why it's not standardized and it varies. It's really hard to actually compare brokers in terms of their educational offerings, because again, it's not standardized. You might have someone who has a bunch of, you know, YouTube videos, but they're all, you know, let's say platform tutorials. So a platform tutorial, although it is helpful and educational, it's not really teaching you, you know, how to apply, you know, Fibonacci tools to do your, you know, technical analysis, or how to draw a trend line, or, you know, how to analyze the market. So there's many flavors of education, and I think that a lot of times, you know, the top tier brokers are going to take, I think, a more prudent approach. But when you look at, you know, brokers that are competing from the lower tiers, you know, they may tend to mix education with kind of marketing materials. So, you know, we've all seen it on the internet, you know, come see our seminar and it's a few $1,000s, and it's usually not really an educational seminar, but just a seminar to try to get you to open up an account. So marketing and education are not the same. And I think that's the challenge in the industry. We do rank education. If you see here in the broker's rating, we have education, but we give it a 1% weighting on purpose, because, you know, we don't want to overemphasize education because it varies. So rather we want to educate traders about education, and that, you know, it comes in many different flavors. And, you know, a broker could offer a ton of resources for education, but it really depends on the type of resources. So in our variables, when we're doing rankings, even though we don't give a big weighting to education, we do scrutinize it. For example, we require that brokers have at least, you know, a certain number of videos to make sure that they qualify under the educational section variables, and as well as articles, as well as by experience type, as well as by subject. So, you know, experience type would be videos or content for beginners, or video content for intermediate or for advanced users. And then by type would be, you know, education about, you know, foreign exchange, fundamental analysis, or some other category, you know, technical analysis.
How do you differentiate between research, which could be educational, and education that could be research?
So that's a fantastic point. And research actually does slightly encompass education. I would say that education is a subset of research. So, you know, research is a much broader, you know, concept, and, you know, education is kind of a little part of that, or a big part of that. Sometimes it depends. So when, you know, often when a broker's education does really stand out, we may give the broker props about that in the research section. Not always, but, you know, we like, for example, here on Saxo, and again, I just chose them randomly, you know, we mention the educational portal, you know, alongside their research, because as you correctly pointed out, it's you know, it's an important you know, subset of research.
All right. Well, anything you want to wrap it with, Stephen? What a great resource you've created for FX traders. I'm so glad that I reached out to you on Twitter. Anything you want to wrap it with?
I would say really quick, since we covered a bunch of things and we're out of time, that when, you know, when traders land on the site, they could enter their country name in this international investor section. They could see what brokers accept them, depending on, you know, where they are located. They could click on the rankings to see our last annual review. We have a new annual review that's publishing this quarter, so be on the lookout for that. We're excited because we have 43 brokers. Last year we only had 20, which you could see here that we reviewed. But now we do have 43 reviews.
Is that because a lot of new ones opened, Stephen, or your coverage just expanded?
Yeah, no, our coverage just expanded. I mean, there's definitely new ones coming in, and there's probably hundreds of brokers out there, but we wanted to start with kind of, you know, the largest first and then work our way down. I would add also that at least half of the brokers we've covered this year have offered cryptocurrency trading. So that's a really exciting thing for many investors who want to gain exposure to cryptocurrencies, whether they want to buy the underlying from a place like Coinbase or Swissquote, or trade a CFD derivative on crypto. You know, over half of the brokers that we've reviewed, which you could see here, offer cryptocurrency trading in one form or another. And it comes in many different flavors, so not all offerings are the same. You know, just because two brokers offer Bitcoin doesn't mean it's the same thing as a CFD, because there could be, you know, differences in the contract specifications. For example, the broker might have higher margin requirements, they might have different spreads, and besides pricing, they might perhaps limit leverage over the weekend, or not even let you trade over the weekend. So usually in crypto, you know, you could trade through the weekend, but in CFD trading, you know, that's not always the case. Some brokers do permit, you know, 7 days a week trading in crypto, but some brokers only limit you, you know, Sunday to Friday during foreign exchange hours.
Any
so that's
planning
another
to
thing.
any planning to go to 8 days?
Uh,
You know the Beatles song, 8 days a week. So what a great presentation, Stephen. I'm
Thank you.
glad I met you, and I think that this is a video that people should see. Anyone who trades needs to know where they're parking their money and for what reasons, because really we're employing the broker as their customer. So before you hire a broker, you need to go to Stephen's site and see where you're trading and how it compares to other things, and have a great weekend and continued success with edifying the trading public with what offerings are out there, Stephen. Congratulations.
Thank you very much, Dale, and for hosting us, and for you know, to forexbrokers.com. Thanks so much.
You're very welcome. Have a great weekend. And that's it for us, guys.
Cheers.
Cheers to you, Stephen. Nice call by Blake and the S&Ps. They went from higher to 7 lower, and the Dixies continuing to strengthen. See everyone in the private chat. If not, I'll see you on Tuesday. We're off Monday for President's Day. And most of all, my trading warrior brothers and sisters, don't just count your pips, count your blessings. Money comes and goes. Time is gone forever. Make it count. See everyone Tuesday. Thanks again, Stephen.